What's up, guys? Welcome to the Crypto Gains Club. It's your boy Anon. It's been a few days, been more than a few days since the last video, and I apologize for that. This is kind of one of my shortcomings, and this is why I would hope that somebody wants to take over. I genuinely mean that. I would love for somebody else who is passionate about this ecosystem, passionate about Pulse Chain, wants to spread the awareness, has the time, dedication, and the bandwidth to do these things, and has, actually, hopefully, even more knowledge about, lending protocols and leverage trading protocols, and PHUX and how those kinds of things work. If somebody has that kind of better education, it'd be great to have them take over. I would throw all my support behind them, but until then, I think this community has a lot going for itself. I think there's a lot of opportunity here, and I would love to share my passion about this community with other people. I would love to help onboard people, help show them that this is not a scary place, that PHUX, Fame, and Fiat, they're not all that complicated to understand, and that there's tools you can use to mitigate your risk, and that's what this is really about. So it's about trying to help people understand the markets better, to be better investors, hopefully. And, well, that's saying a lot, because I wouldn't say that I'm an expert, right? Like, I'm learning this as we go along. So please don't take this as financial advice. I'm just here to share some of the numbers you see, get the community engaged, talk about different things, and then help present some strategies, and also with the strategies help you consider the risk, in that there is no, if you're looking for a one-hit wonder, you're looking for that lottery ticket, this isn't really how that works. That's not how you generate wealth. That's not how you plan for the future. So anyway, let's just jump into it. So we're looking at Fame here, and today we're going to go over some of these numbers on Fame and Fiat and PHUX, but the point of this is to show more of what Fiat is capable of doing, because I think we understand Fame is leverage trading. A lot of degens love this, but also Fame is great for risk mitigation. You can hold a bunch of assets that you like, the more risky assets, long term in your wallet, right? Safe and secure. But then on the short term, you can, put in a short or something, and maybe profit and mitigate some of the risk to the downside as you hold for the longer bull cycle. So Fiat, I think, is a little less intuitive for a lot of people, but really it's just a lending protocol. You can deposit some tokens and then borrow in exchange, and then I'm going to show you some cool ways that maybe you can start to think about utilizing the two, and then also link that back into PHUX. So let's get into it. Last time I did this video, I think the holding APR was like 90 or 85 or something higher, right? So it's gone down a little bit, but you can see that the PHLP pool has grown. It's at 2.6 million. In general, people are quite long. It's about 1.2 million long, and then about 450,000 in short positions. So there might be some opportunity there. Total volume just continues to tick up. I think 37.5 million is phenomenal for the short period of time this platform has been running. This protocol has been running. That is amazing. And then the total fees generated for that has been 200,000. Like, I think there's a lot of opportunity when prices start to pump. It might take some time, but this is a great time to get used to, kind of play around with how these things work, maybe risk, small amounts of money, and just kind of play around with it. I've loaded up a wallet, and so I put about $2,500 worth of Pulse in there, and I'm going to start buying up some of these tokens and using these platforms to kind of show you how these things work. It's not going to be like to brag about how great I am as an investor. It's just to show you these tools. So, I mean, if I make money, I mean, I don't want to lose money, but if I can make money, that'd be fantastic, right? So, yeah, let's get into it a little further. Now, so here's something I want you guys to keep in mind: the stable coin percentage of this pool. So, PHLP is a pool of these tokens, right? So you could deposit any one of these or more than one, and you get a basket. You're basically invested in this basket right here, based on these percentages. So of that pool, though, about 38% is made up of stablecoins. So keep that in mind because it's going to link back into the strategy I'm going to tell you about a little later. Let's see. So actually, let's jump over to trades. I wanted to tell you guys something that the PH team did, and which is that they lowered the fees for opening and closing a position, which is they lowered it by 25%. So that's really nice. And I think the reason why they did that is to encourage more volume. So maybe, the percentage of each position is slightly less, but if you have more volume, there's still a very good potential for the house to make money in the long term. So this is encouraging to me just because I see that the PH team is engaged with the protocols. They haven't left. They want to try to find something that works for everybody, right? And so that's really cool. This is only supposed to be for a 48-hour period. I don't know if we've hit the 48 hours. I know it's been at least a day since they did this. Might be at that 48-hour period. Maybe they like what they see and they're just going to keep going with it. I'm not sure, but it's just to show you that they lowered the fees by 25%, which is that it might look like for somebody that's not familiar with numbers very much or isn't used to these things, like it went from 0.4% to 0.3%. It seems like nothing, but that percentage change is 25%. So the way that works is if you open a position, you're automatically in the negative, whether it's short or long, because you had to pay these fees, right? It's some small percent, but it's not nothing. And any amount that you get to lower on the fees that it costs you to open and close a position, that helps you potentially with either making more money to the upside or mitigating some of the losses, right? So very, very nice of them to do that and continue to play and improve in these kinds of ways. So that's good. Let's go back to dashboard. Yeah, I mean, these percentages are always moving around, so they're not fixed in stone. Only the targets right now are fixed. I don't even know. Maybe those could change as well. I'm sure if they add more tokens to this pool, then these targets are obviously going to have to change, right, to equal that 100%. But, it seems like Pulse, PulseX, Hex, even ETH, yeah, they're all above the targets. Meanwhile, Wrapped Bitcoin, DAI, USDC, and and Tether, they're all under the weight, right? So, these can change at any point. And kind of keep this in mind too, because I'm going to go back and reference this again. Yeah, so let's move on. Let's jump over to Earn. For staking your Fame tokens, you're earning about 11%. Again, that fluctuates, but that's still a really good number. And as more volume continues to come to this protocol, percentage is one thing, but if you're earning 11% of nothing, it's you're basically earning nothing. So as volume increases, which all again goes back to them playing around with the fees, if they increase the volume, then that's a really good sign. So, okay, what else? They have the Pareto pool. What do I talk about? So another thing that I might not have mentioned last time, but I'm going to mention it again if I did. So the really cool thing with PHLP is whether you have it in your wallet or you have it staked in this pool, you're still able to generate or earn the fees that are generated from the protocol. So, and I think this is the unique thing about Fame versus GMX. Which this is a fork of GMX if you don't know. So whether you have that LP token presented in your wallet, or you have it a part of PHUX. Actually, I think I have this pulled up here. Yeah. So whether you have it staked in this pool and it's earning you the PHUX token from the trading fees, or you have it liquid in your wallet, you still earn the PHLP, the fees that are generated. So that's really unique, and just keep that in mind. I'm going to come back to it later. All right, so we talked about that. Stats. I'm not going to dive into all of this just yet, but I do want to just kind of touch on this really quickly. There is a lot here. You get to see how much, for example, how much PHLP is being minted on a daily basis, how much the liquidations are, how much margin are people using, for example. So that's just that one chart. You can see the profit loss on a day-to-day basis. Some days people are losing a lot, which is good for the house. Some day that individuals are winning, and so the house takes a little hit. But such is the game. So these things are not without risk. I always want to remind people there is risk. I really like this chart just because it's like I don't know. It's like, what do they call this? Abstract art or something? Like, it's just really goofy looking. But yeah, I mean, you can see that each one of these lines represents a different token, and so this is the borrowing rate annualized. So obviously, it's going to change on a day-to-day basis. Yeah, just really cool. You can look through this, but also at the top you have individual traders, so you can see the top traders. You can see the top profit loss holders. There's right at the top, you see Buck is bringing in a lot of the volume, right? So he's using the protocols. He's active, very, very active, and at the same time you can see, based on current positions, who's in profit and who's not. So like Buck is using it a lot, and he's coming in at number 4. So, it should be no surprise he knows what he's doing, because, he does this for his day job. So great. But like at the same time, there's kind of this funny meme about, there's like a hashtag that says hashtag liquidate, Operation Liquidate Buck or something. I can't remember exactly what it's called, but if you're in the telegrams, you see that all the time. So Buck lately has been very short, and he's been vocal about being short. And so he's challenging people to liquidate him by buying up on spot and pumping the price, right? Which would pump all of our bags, right? But then it would also liquidate him, and it'd be really funny. So, dude, just go liquidate Buck. I don't know what his position is. Like, I don't know if he's long or short on this particular one. But there's also a Telegram chat that gives updates on all the positions. So it's a channel. It's not a chat. It's a channel. And it gives you, if somebody opens a long position, short position, if they closed a position, if they got liquidated, it has all those alerts. And so you can go over there and you can see, who's doing what. And then you can also, so I'll have to show you one of these days when I open a position. There's a little, there's a card that gets generated, and you can share your card, and it shows like, hey, I have this token, I'm long or short on this token, and this is my entry, exit, liquidation price, whatever, and the percentage that I'm up or down, and you can use it to talk shit with other people. So I think this community is going to be pretty exciting. If you're in the telegrams, you're going to see that people are engaged. So some cool stuff. So that's on the stats. All right, let's see what else we got. I think this is a good time to jump over and start talking about the strategy. So the strategy was Crypto Moo came up with it, right? So he's the one that you want to talk to if you have deeper questions. I'm going to try to give you a rundown, and hopefully I do a good job. Crypto Moo is available on Twitters and Telegrams. I don't have his handle, but he's not a hard guy to find. So he came up with this idea, which is if in the short to medium time frame you are bearish, right, that you think the prices are going to come down on the risky assets, if you believe that, then this might be a play that you might want to consider. Again, not financial advice. I'm just trying to set up a scenario where this could work. So in this scenario where you think the risky assets are going to go down in value, what you might want to do is deposit stables and then borrow the risky assets. And the reason why you might want to do that is because when you, now I can't show you yet, but when you borrow an asset, it'll give you a health factor based on the collateral that you put up. So if you're putting up stablecoins as collateral and you're borrowing an asset which you think is going to go down in the medium to short term, then your health factor shouldn't be a problem in terms of having to pay back that loan that you put up, that you take out. So when you do that, you borrow these risky assets, then what you might want to do is come over here and here, and you might want to buy PHLP with the borrowed risk on assets. So you'll have to play around. Now, I mentioned how you're going to want to keep this in mind, the weights and the targets, because this correlates with the amount of fees you're going to have to pay. So if you come over here and let's say type in a bunch of numbers. Okay. What I want to buy $11. Let's say I want to buy $110 worth of, man, I really wish they used commas. So it's 10 million PLSX. The fee for that is going to be 0.39%. Okay. But if you come down here, you can notice that some of these other tokens have different fees. Like the fee for Pulse is less. So, maybe that's an incentive. Now, it's since I mentioned before that Pulse, PulseX, and Hex, even Wrapped ETH, all the weights are above the targets. Therefore, the fees are more than the stables. So, that's just a trade-off you're going to have to accept if you want to play this strategy. But should you do that, you're going to be in this pool, and 40% of this pool, or 38% of this pool, remember I told you to pay attention to this 38% number? 38% of this pool is made up of stablecoins. So you deposit stablecoins into fiat, you borrow the risk on assets, thinking that the value of these assets might go down. You come over to Fame, you buy PHLP, which you're depositing the coins that you borrowed into PHLP. So it's in a sense shorting, but you're not selling that asset down. So it's not a spot, like you're not selling spot, right? So, but in this pool, 40% of it or 38% of it at the moment is made up of stablecoins. So it kind of lowers your risk there. But at the same time, now that you have PHLP, you get to earn, 70%, 70% APR. So you're earning from this pool, from the fees that are generated, but also you can come over to the Forgy pool, stake and earn PHUX as well, right? Remember how I told you that this is all going to fit in? So now you can earn the fees that are generated, you can earn PHUX, all the meanwhile, the health factor for your borrowed risk on assets is healthy, so you don't have to worry about paying back the loan just yet. That might be a really good play. And see how all three of these protocols now tie back into each other. So that's a really, really smart, that's a really creative and intuitive way to use these protocols. And it's something to think about. Hopefully this strategy kind of just gets your mind going in terms of the different ways that you can utilize these protocols and how it might be beneficial to you. Now, the risk is that if those assets start to pump, you might need to do something. But hopefully the APR you've earned from holding the PHLP and maybe even the PHUX, maybe that those APRs, they can offset the price increases. I don't know. I don't know. This is a risk, but it might offset just a little bit, right? And that might help with you to just manage your risk. So this is, anyway, at the end of the day, this might help you make some money as the prices go down while still holding, having control of your assets. Because so this is DeFi. In fiat, you're actually not giving this up to any person. It's not a bank. It's the protocol. So as long as you honor this commitment that you make to put up collateral in exchange for these tokens, and you manage and you pay attention, the only person that can screw you over is yourself, right? If you stop paying attention and you get liquidated, if the prices run away, if the health factor goes into the danger zone. So this is an amazing set of tools, and hopefully you guys take something away from this. Let's see, did I hit every point that I wanted to? I think so. I think I covered all the points that I wanted to cover. Yeah, okay, I'll leave it at that. And then hopefully on the next videos I will do some quick trades and show you how these things work. And on Fame, I actually learned a lot. I've only done like 3 trades, but I've learned a lot. Like you can, I'll talk about market, limit orders, and trigger. When you want to, like you don't have to sit at the computer all day. You can set a limit order, you can set a trigger. So like, let's say you open a position and you want it to close at a certain point, right? Whether if the trade gets away from you and you want to mitigate your losses, then you have a point at which, you're like, okay, cut my losses, boom. That trigger will activate, there are some things that have to come into play. You can't just have these crazy wicks. You're going to, the price has to sustain itself. And if it does that, then the trigger will activate. Or limit, like let's say you didn't open a position yet, but if the price moves in a certain direction, let's say the price dumps, to a certain point, and then you want that long position to activate, then you can set the limit order for that. So I'll go through those examples and walk through the actual steps in doing it. It seems a little scary, but it's not. So, all right, guys. Thank you for listening. Spread the good word. See ya.